All right, we're live. Thank you, everyone. Welcome. This is Christian Arce, and this is another episode of um, Real Estate Talk, where we talk to fellow Facebook friends um, in the real estate industry, in the lending industry, and just simply to give you a different perspective, what's going on out there in the trenches, and share some good tips and ideas and opinions for real estate people, real people from an industry, and just kind of give you a different perspective of what's going on, right? From brokers, lenders, investors out there doing it every day and grinding. So just the idea is to push through this COVID-19, and also encourage you to take some action. So I'm really grateful to be here for talking with you all today. So please like and share. I would really appreciate that. Facebook, YouTube. We're live on both right now, and Instagram if you can, so we can reach out to more people looking for some information. Okay, so now, today I'm going to be talking with a friend of mine, a guy that we work together. We've been working together for a while, and we help real estate investors raise funds for different type of transactions. But Justin, that is going to be with me today. He not only does that, we also help all sorts of business owners. But today we're just going to be concentrating, and we're going to be talking about mostly about real estate. But let me bring him in. His name is Justin Long, and he's with National Corporate Credit. So give me 1 second, and I'll bring him over. Um, Justin, can you hear me? I don't know if I don't see him. Hello, Justin. Let me see if I can bring him over. Nope. Well, we're going to wait for him for a little bit. We were having some issues, some technical difficulties in the beginning of the broadcast, and I had to refresh my screen, and I probably kicked him out without intention. So we're going to wait for a few seconds. But like I said, we're going to be talking about all sorts of funding and how we can fund your real estate deals. And a couple of things that we going to be talking about is the different type of funding that we're going to be looking at. And couple of those things are how you can fund, with hard money, private money, unsecured lending. We're going to be touching all those spaces, okay? And then obviously we're going to go through a couple different strategies, like wholesaling, fix and flips, rentals, short-term rentals if you have those, or even multifamily properties, right? So we're going to be talking about that. Let's see if Justin is being able to join us. Otherwise, let me send him a message really quick before we can get started. Sorry about that. Like I mentioned, we were having some issues in the beginning, and he couldn't see me in the beginning. So my screen kind of. Give me 1 second. Oh, me too. All right. So yeah, apparently he got disconnected. We all got disconnected from the internet. It looks like. So and I think that was the main issue. I apologize for that. I had to. But again, so we're going to start. In the meantime, while he gets his internet reconnected, and he can join us in a couple of minutes. Okay. Sorry about that. So we're going to start first with. private money and hard money today. Okay, so we're going to talk a little bit about that while Justin can rejoin our live. Okay, so this is live, so that's what happens when we do it. Is coming raw directly to you. So I'm excited today. So talking about funding and how to raise funds for your real estate business. I've been in the lending industry for a long time. I started investing in real estate also, but even though I started, I stopped practicing lending about 10 years ago when I started investing in real estate. I stayed in touch with the lending industry mainly because obviously we all need money for real estate and for a real estate deal. So now so after that I started joining again this company about 2 years ago when I saw that a lot of real estate investors were coming into the market, and a lot of them they needed to see a couple of different ways on how to be more creative on financing some of their deals. At the same time, in the last few years, obviously you've seen now the difference, right? If you had a few deals already done, and if you finance a couple of deals in the last 2 years, I would say you can see the difference of what we were going through a few 2 years ago and now, and it was obviously a lot easier in the last 2 years. You could finance a deal with just 10% down, right? And you can get a fix and flip finance or a rental or anything like that. Now, banks are asking for 20, 25, 30, even 40% down. Okay, and that is something that I went through in the beginning of my real estate investing career per se. That when we started back in 2010, back then there were not a lot of private lenders or hard money lenders available. So and the few of them that were available, they were also asking for 40% down. So some of the when I started using that type of financing back then, we had to put 40% down on those deals, right? And obviously over the years, as the economy got better and better, those banks, they started asking for less money, and they were taking more risk. Now obviously, due to COVID-19, banks kind of stepped back, and they, tightened the guidelines, and they started asking for more liquidity from the borrowers, more experience, and a little bit more also down payment, right? So some of them, they're asking already, anywhere from 20 to 25 to even 40% down payment, right? So I think Justin just joined us. Let me see if he can come in, ready to join. So I think I got him. All right, let me see if I can bring him in. 120. There you go. Hey, Justin, what's up, man?
Hey, Christian, how you doing? Sorry about that.
Hey, no problem, no problem. And it happens. I think I got kicked out too. For a moment, I thought that my computer froze or something. I had to, refresh my screen. So it was, and you lost your connection. So sorry about that too, man. I don't know
No
what
worries.
it was.
Yeah, actually, my internet is still down. I can't
Yeah,
even get on, so I'm just gonna do this from my phone. I'm just gonna do this from my
that's
phone.
great.
So.
That it looks fine. It's fine. It's going great. So hopefully I don't lose my connection. So so um, but I was telling people a little bit about the changes that have been going through the market. Before we go back to that, Justin, just tell them a little bit about you. Who you are and how long you've been in the lending industry. And so we can get started with that, and then we jump back into the subject that I was talking about.
Yeah, definitely. So, well, first off, Christian, thank you for having me on. I know we've been trying to do this and get this set up for a while now, which is funny because we said 5 feet, 6 feet. You got to stay 6 feet from each other. Um, But no, it's been great. I've been in the lending industry for a few years now. I came from the sports world, doing sales in that industry, and one day I actually met the owners of National Corporate Credit through the last team I was with, and basically when I was looking to find my way out of the industry, they asked what's next, and I said honestly I don't know. They said, well, you're good with customer service. We know you can do that part. So, are you interested in learning a little bit on the financial side of things? And, do you think you could do something with this? And I said, what the hell? Why not? So
Right.
I basically just dove in and, head first. And it's been one of the best decisions that I ever made. I always laugh about my personal relationship now with my now fiance because we were like on the borderline of dating when I first started this gig, and she looks at me one day, she's like, so are we actually dating or what? And I just looked at her, I was like, you understand that I'm in a job now where it's a commission based only deal, and this might take me a minute to build it up. And she goes, yeah, that's fine. I'm like, okay. So from that point forward, with her, I knew that obviously she was going to be the one because she was already taking a gamble on me in that
Right.
aspect. So I always say two of the best things happened to me all within a 1 week span. I
Right.
officially started dating her, and then I started working with these guys, and yeah, a couple of the best decisions that have ever been made. Um,
That's awesome.
but yeah, so I've been doing this for a few years now, and I love it. The best part about my job, what I tell people, is that I get to talk to and work with people in all walks of life. That they're
Hmm.
in different points of their life, they're in different points of their business. They have these ideas, they're not sure what to do. And over the years, I've learned as much from these different business owners as I've hoped that they've learned from me, at least on the financial side of things. And I know that I've been able to help a lot of people. I've been able to help out hundreds of business owners, you know, get in a better position to have to run a successful business. And not just through what us here at National Corporate Credit has been able to do for them directly, but also to some of the contacts that I've made over the years and being able to get them in touch with other individuals that can help them out. And honestly, Christian, you're one of the best examples of that. I can't count how many times I'll be on the phone with a real estate investor and I'm not sure what they're saying, what they're talking about. Maybe I need help because it's like, Christian, how did you use corporate credit? When you first started in real estate, and a 5 minute conversation with you, and they're calling me back and they're like, okay, I get it. It's really good
Right.
to have somebody like you in not just in my corner, but in the corner of this company to help really educate real estate investors and then just business owners in general on how we can really help them out.
Absolutely, absolutely. Yeah, thank you for that, Justin. But yeah, the idea we're gonna that's gonna lead us right into what we were talking about, and things that I was explaining to people right when we were waiting for you to join. That the changes that we were going through now and the changes that we went through after the 2008 crash with although it's not the same thing, right? But I'm trying to refer into the lending industry, right? How the lending industry started changing and how it got tightened up because of COVID now, and obviously the restrictions started to change, and now they're started asking for more money, and that was the same situation in which I found myself at that time. Back in those days, the lending industry was very, very particular at that moment. Hard money lenders were not as many as there is now. I believe I was introduced to one or two at that time that were available, and it was something very, very new for me at that time. So, but at that time, they were also asking about 40% down to be for us to be able to do those deals. So we had to come up with 40% to be able to do a fix and flip, even though we had experience already at the time that we were able to do the first hard money
Hmm.
deal, right? So at that time, they were not willing to lend to people that didn't have any experience, right? The new guys, they were not able to get any type of financing with that. So for us, we had to do, the first deals ourselves to kind of put some experience under our belts and then be able to get access to more money, right? And that was
Right.
our case. So, and obviously we had to be creative, and the way that we were able to do it was through corporate credit. And that was actually on a meeting. I was on a meeting with other real estate investors, and we were talking about different ways of financing. And someone started talking about, corporate credit. I did had no idea what corporate credit was, and that's when I got introduced to that, and I was like, a light bulb went up at that moment, because I was obviously I came from the crash, right, from the
Right.
2008 crash. I was in real estate at that time, so my credit got squeezed by that crash in 2008. So when someone talked about corporate credit, I figured that I started thinking about partnering with other people and how can I get access to that. And that's one of the things that I wanted to get into with you, because obviously corporate credit has some restrictions, right?
Hmm.
And that's what I wanted to let's go over a little bit on what are the things that we need, so I can tell you why I was having trouble in the beginning and how I was able to kind of put things together with corporate credit. So, just tell us a little bit about, what corporate credit is and how you guys, how do we can help them, get access to that.
Yeah, definitely. So the way that I describe corporate credit to a lot of people, to put it in the most basic and simplest terms, is look at it as your business is an 18-year-old teenager, right? When you first establish your business, look at it as an 18-year-old teenager just getting ready to go out in the world. One of the first things that they need to do is establish credit. So that way, when they're ready to buy a house, when they're ready to buy a car, maybe if they're going to school first, but in the future they're going to look to refinance their student loans. The one thing that all these lenders and these banks are going to look at is the strength of their personal credit. So
Right.
it's the same thing when you're a business owner, because at the age of 18, you're not just going to walk into a bank and say, I need 250,000, $300,000 to buy my home. If you're going to do it at that age, more likely than not, it's going to be mom, dad, grandma, grandpa, somebody's co-signing for you to get that kind of
Right.
funding at the time. So you need to establish your personal credit, and that's going to take time. That takes history, and to get good interest rates, to be able to get good terms, it takes building that credit up over time. So again, look at your business from year zero as an 18-year-old teenager that needs to start building that credit. So same thing here. What we do is we work with a network of banks to help you establish credit with major lenders, and it's funding that you're going to be able to use, for various parts of your business. People ask me all the time, well, what would I do with what am I doing with a bunch of corporate credit? What am I doing with business credit cards? The first thing that some folks will say is, well, I have access to 30, 50, 100. I mean, heck, I've spoken with people who have access to over $200,000 in personal credit cards, and
Right.
that's great. They've done a good job building up their credit over time. But the one thing that I always have to educate them on is, you know, if they decide to take their 750, 800 credit scores and all of a sudden start to utilize 50, 60, $70,000 to put into a real estate project, what's going to hurt their credit even more is carrying over those balances month over month. So they don't look at it as, I have all this available to me, this is what I'm going to use it for. And then they don't think of the consequences of, okay, well, if I can't flip this project and sell it within 3 months, and I'm carrying these balances for 4, 5, 6, 7 months, that's really going to drag that 750, 800 credit score down, you know, significantly. I mean, one of the worst things that I hear real estate investors and just business owners in general say is, oh well, 30 days ago or oh 6 months ago I was in the 700s, I was in the 800s, but I had to do all this, and now I'm down in the 600s. And it's like, unfortunately, there's just nothing you can do at that point in time. So getting access to that credit early on and understanding what expenses can I put on credit. Christian, when we're done, what I'll do and what we can post here is I have I found this list that somebody posted online probably about 3 or 4 months ago. It said 9 hidden costs, I believe, 9 or 10 hidden costs or unexpected costs of owning a business. And I look at that list probably once a quarter, and I post it and I say, I see about 5 or 6 expenses on here that can go on credit instead of using your cash, you know, and, things like licenses, insurance.
Right.
I speak with a lot of folks that are in trucking,
Right.
gas, repair, stuff like that,
Right.
real estate, having to pay for materials,
Yeah,
maybe a
well, in real estate, we call it soft costs. So any of those soft costs that is insurance, licensing, all that stuff that is, business has to cover for that.
right, and I'm sure you can pay all that with credit, right?
Right.
Yeah.
Absolutely. So, and yeah,
So
I mean, it's perfect that, you're talking about the leverage or, using personal versus using your business credit, right? So
yeah,
the idea is that when you're starting in real estate, or if you're already been in real estate for a while and you haven't done this, I think that is something that you gotta take a look into it and get a hold of it and learn more about it, on how to build credit for your company. Okay, because it's all about leverage at the end of the day. Real estate, even though you're doing real estate, you is under your company, and your company is a business that has to make money and has expenses every month of everything that we're doing. And every time we do, I'm going to speak from the point of view of fix and flip, because where I have the most experience on. And in fix and flips, we have expenses every month that we have to take care of. And as a fix and flipper, you know that there is not as much cash flow as a rental owner, right? Because with the money is actually going out, not going in. So everything is going out, everything is going out until we sell the property and we get paid everything back, right? So
right,
for that, that's one of the reasons that we were looking at different options to finance our deals and to finance our upfront cost to get a deal done, and then be able to pay everything off once we sold the property, right? So
right, exactly, and it's best to keep that debt under the business, because not only do you avoid your credit score taking a huge hit because of carrying major balances for
mhm,
months on end,
yeah.
but also heaven forbid something happen on your personal side. That what happens if you max out your personal credit, and then now all of a sudden you need to use some of that credit for, say something at your home, or say something happens to your car, and now your credit is majorly impacted because you have a lot of credit card debt, high interest rate loans. That's not what you want. That's not why you built up your good credit. And then the one thing that I tell a lot of folks, I was having a conversation this morning with somebody that you and I are both working with right now, Christian. Very smart, educated real estate investor. Has great credit. Excellent um, has excellent income, and is really looking to start expanding his real estate company. You know who I'm talking about?
Yes.
And and it took both of us to really educate him on the benefits to corporate credit. But one thing that he asked me about right away was, well, do I have access to cash immediately off these lines? And I always have to make sure that I'm very, very clear with folks and let them know that a majority of companies are not going to qualify for a cash product
Right
of
away.
credit with these lenders right off the bat. They want you to
Right.
establish history with them. They want to see that you're doing revenues with them. So typically, businesses need to be doing, you know, more than $150,000 in revenues a year, not taking any losses. They need to have good personal credit, and then these banks may start to offer them checkbook lines, which is
Right.
will then give them access to the cash right away. So one thing that I had to explain to them is, look at corporate credit is it's a marathon. It's not a
Right.
sprint. You're
Well,
not
but I think it's a myth, Justin, that a lot of the real estate investors go through, that they all think that they need liquid cash to be able to do, fix and flips or real estate deals, right? Any type of transactions, and that's not true. That's not the case. You know what I mean? Going back to that beginning time, was that we didn't have the liquidity, right? We didn't have the cash at that time. So we had to figure out a different way to do it. And we were able to figure it out to do it, by with credit, right? And
right.
honestly, I mean, it's just a different way of paying things. But nowadays, actually, it's more common that absolutely everything is being paid with credit. But at the same time, is these the lending industry is also a relationship business, right? So you have to create a relationship with your lender. You have to create a relationship with the entities that you're getting credit from. And the more the like you said, they're not going to give you a checkbook control, or they're not going to give you access to cash, some of them right away, because you have to build out that relationship with them, right? So
Right.
they get to know you. They gotta see that you're able to get a deal completed, and that you're able to spend some money, that you have the ability to pay that back, and so forth, right? So the idea is, with everything has to be relationships. So you have to start thinking about it from the point of view of leverage. Now we're going to leverage your credit to be able to get access to money, right? With corporate credit, yes, even though it's going to be credit lines only, it's not going to be liquid cash in the beginning. Eventually, once you build out that relationship, some of them, they start giving you checks, right? So
Right.
they start allowing you to use the money. They're not going to give it to you right away. Believe me, I try, but they don't give it to you right away. So, but the thing is that you have to find different ways to go around that, right? And then, for example, just to give you a couple of examples, that what we did with our contractors, for example, we had to pay our contractors with our business lines. And a lot of people say, well, how do you do that if you had to, you know, they want cash or they want a check or something, right? So usually, if you have done your things correctly, you're not going to be paying your contractors in cash, right? You're going to be paying your contractors with the company check if you have cash, right? But if you don't have the cash, you have a business line of credit, you have a business credit card. So what we did was we asked our contractors to set up their company with a PayPal account, right?
Yeah.
So they set up when you set up your company with a PayPal account, you connect your PayPal to your company account or your personal account, whatever they have at that time, right?
Right.
So, and at the same time, PayPal allows you, when you open a business, which is free, by the way, is a free account. PayPal allows you to send invoices to your clients, right?
Right.
So I said, every time, we need to pay you something, it kills two things on the same moment, because first, usually it was really difficult to get them to send you an invoice for something, right?
Right.
So I would say, look, every time you need to get to pay, you just need to send me an invoice. In that invoice, you're gonna determine what we need to pay you, what do you do this week that we need to pay you, and how much it is that we need to get you paid. And then you send me that invoice. It's an electronic invoice. So I was able to pay that with my business line, right?
See,
And I
that
didn't need
that's
a check. I didn't need cash or anything like that.
And that's great. I mean,
right?
that right there is great education that business owners and investors don't know that they can do. They don't know that they have the ability to just have merchants set up a simple PayPal account,
Right.
and hey, Christian, sorry, I don't have that cash available, but I do have credit. Do you mind just setting this account up? You can use it for, here's some ways that you can use it for the rest of your business. So you're almost helping now that contractor
Yeah.
put an additional piece to his business, all while being able
It's a
to,
time.
even if you
Yeah.
have the liquidity, hold on to the liquidity, because
Yeah.
you're right. There's so many times that people come to us and say, "Hey, Justin. Hey, Christian. I need X amount of thousands of dollars cash because I need to purchase this home, and I can only purchase it with cash." Well, how many transactions have you done over the last 12 months where you used your liquidity when you could have put it on credit?
Right.
And
And
maybe
the
you would
thing
have
is,
had.
like, well, a lot of people are afraid of, okay, the interest rate of the credit cards, right?
Right.
So, but in the beginning, when we started, and when anybody is going to start, they're going to start at 0% interest. So for that, the first year or sometimes even 2 years, you can get it at 0% interest, and you're going to be paying zero interest on any money that you use.
Right.
That's one. But then after that, right? They're going to go back to their regular interest rate, and that's okay. So even for us, when you mentioned, even when you have the liquidity, even when we did have the liquidity, we still channel things through the business lines. Why?
Right.
Because what we were doing, you're doing two things. We're trying to build up those lines of credit, and then create credit under our company,
Right.
right? By channeling all the expenses through our business lines,
Right.
right? The more you use them, the more access to money you're going to get, and then you're going to be able to grow them over time,
And that's
right?
exactly it. That's a key point that I try to hit on with all of the clients that I work with, all the business owners, all the investors, is that, listen, we're going to help you get these set up now, but these credit limits will increase over time. These lenders will offer you other financial products over time. So
Right,
again, you know, that's when you really just need to view your company at the startup stage as an 18-year-old building up credit, because as an 18-year-old, you don't have the credit established to get a mortgage right now. So it's the same thing here. What makes you think
right,
at the age of zero of your business that you're going to be able to get 150, 200, $300,000 checkbook line? They're not going to give
right,
you cash, but what they are going to do is they're going to say, "Hey, prove yourself that you can handle credit, and then
right,
we'll look at to see what else we can offer you down the line." And again, that's the huge advantage to working with multiple lenders at once too.
right.
I I remember I had a conversation with somebody at the start of the Corona pandemic, and they let me know that back in 2008 there was a number of investors. He was just starting on real estate investing himself, and there were a number of investors who went from having tens and hundreds of thousands of dollars of available credit to getting cut in half, or even
Mm-hmm.
being able to get a quarter of that access because the lenders really started to tighten up. So that's
Yeah.
why you really want to establish good relationships with multiple lenders. So that way, heaven forbid, something else happens again that we see, another 2008, 2009, or another coronavirus type situation where the economy, flips like that. You want to have access to a lot of capital at any point in time, so that way you're not strapped.
And
And
that, that happened back then too. That happened back in 2008, 2009, 2010. It happened to a lot of small businesses, a lot of contractors that I knew at that time went through that situation. And a lot of them, they were, general contractors. A lot of them, they were financing some of their own jobs, not actually properties, but they were financing jobs that they were getting through their business lines. And when they got those lines cut off, of course they were, they got hurt because they couldn't continue to work. And but that usually happens when they didn't use them all, right? When they were like, using just a little bit of the line. And the idea with business lines is to use them as much as possible, so your business can, have always availability with cash, to have cash liquid all the time, saved on the company. And at the same time, it would, one of the great features of the business lines is that it doesn't report to your credit, to your personal credit. So by you using the full amount on those lines, sometimes it's not going to affect your personal DTI, right? So that's one of the great features that the business lines have. And I think that one of the ones that have to take the most advantage of, because a lot of people sometimes they say, well, I don't want to use the full amount of my credit cards because it's going to lower my credit score. And that's what happens when you use your personal ones, right? So that's why it's so important to separate business from personal, right? So that way, when you get into these deals, when you get into rentals, when you get into Airbnbs, when you need to do advertising for your business, when you need to, pay for soft cost on a fix and flip deal, all those things you can pay them with your business lines, even if you have your cash. Okay, because when you are at a point that, let's say that you're already over the 0% promotional interest, and you go back into the regular time, we will still use the lines and then pay them off every month. You know what I mean? But the idea is we wanted those lenders to see the activity that we had, right?
Right.
We had, to pay for properties, we had to pay for gas, electric, alarm systems for the properties, and all sorts of things, insurance, all the costs that any company goes through, right? And we put everything through the credit cards, and every month we had to pay, those credit cards in full, right? But that the idea is for the every time when we close a good deal and we had a lot of liquidity in our company, then we will call these lenders and say, hey, we're looking for line increases. And when they look at your history, they were like, okay, yeah, I mean, we see that you use them, you pay them off every month. And when they see that history going on every month, they're willing to give you more. And that's how you know, take full advantage of it, and you keep growing that. And at the same time, I mean, you're not limited to
Absolutely. I
one
mean,
company, right? So
you hit it on the net.
you
They're going to give right, right. Are going to offer you other financial products and work on more projects, and the return there. Once they get to that point, they're going to whatever funding that they're utilizing. So even if they do have to carry it back, so it's not, it's not killing their bottom line.
right. Yeah, sorry, we're having a little. I think the internet is going in and out a little bit, but I think it came back for me. But yeah, absolutely. The idea is to leverage that as much as possible and to be liquid at all times, right? To have as much liquidity as possible for moments like this. Now that we're going through COVID, and a lot of companies are having issues with liquidity, and at the same time, going back into private lenders and Harmony lenders, Now they're looking for, that's one of the things that they're looking for more. When if you still want to do more deals, if you want to do get into more fix and flips or more rentals or any type of transaction that you're trying to do now, one of the main things that they're looking for are is liquidity. Okay, so liquidity, experience, and property location. Those are some of the three main things that they're looking at to determine how much money they're willing to lend you, how much risk are they willing to take with you to do this, right? So, but I wanted to go through a couple of different things on the harmony, so that way we can show them how we can, how we can emphasize more how business credit can get involved in the transaction and how we can help them pay for some of those things, right? When we go through a lot of new real estate investors are going to go through this now, right? So private lending now is a lot easier to get access to, right? There's a lot more companies. I can help them with that as well. Okay, so if you're looking for private money or hard money, reach out to me. That we can definitely help you get access to that and get you going with some of the deals. But now the same thing that we talked about in the beginning is that those same lenders are going to give you the bulk of the money, right?
Yep.
If you, let's say, we're going to give an example. If we need $100,000 to purchase a home and to rehab it, right? Altogether, we need 100 grand. So obviously the bank is gonna, now they're lending anywhere from uh, 80 to 75% to 70% of that amount. Okay, so of the total amount that you need, you're going to have to come up with 20, 25, or 30% or 40% of that amount. Okay,
Right.
so, and how do you determine that? Do you determine that based on the experience? That's what we're talking about, right? Experience, liquidity, and property location, right? The property location has to do with the risk of the bank that the lender is taking for you, right? So it doesn't mean that they're not going to lend you money. They will
Right.
lend you money, but they're going to ask you for more skin in the game, right?
Right.
Because they say, well, look, we look at the numbers. It seems like the numbers work, but the area is more risky because of this or this situation. Um, so you're going to have to put some more skin in the game. We're willing to go with you, but you just have to come up with a little bit more money yourself, right? And that's where we come in with business line of credit or even the term loans that you provide, right? Term loans, we didn't even touch those, but you also provide term loans which are unsecured loans, and
Yep.
they're liquid cash, right? Let's talk a little bit about that before we continue.
Yeah, definitely. So the term loans are very simple, standard personal term loans. The biggest advantage is that it does give you the access to that liquidity that everybody wants, And as you stated, they are unsecured. So this is again where it's a little bit different for investors because they're used to, having to put up some sort of collateral, whether it's the home or their own home or something to secure the funding. This is just strictly, how good's your credit, how good's your personal income, and we can go ahead and help you get that liquidity. So I mean, yeah, definitely plenty of times that we've helped people get 50, $100,000 to put down on for the purchase, to give them that 20, 25, 30% that they need down, and then
Mm-hmm.
also look at the credit side, get the corporate credit. But the thing that I always tell them is that the reason that you do something like this is to this way you don't have to go to your hard money guy, you don't have to go to your private lender and take out and get so much money. If they say, hey, you need to come to the table with, let's call it 25%. Well, if they can say, well, hey, I have 40% in cash already in the bank, plus I have another 20% on credit, great. That lender is then going to work with them all the time because the lender's going to say, "Hey, man, Christian really has his stuff together. Like He comes to the table with what I need him to have. He's prepared. He's got
Right.
liquidity. He's got credit available, you know. And then as you do more flips, as you buy more investment properties, these lenders are not going to have an issue working with you. They're going to give you good rates, you know,
Hmm.
not charge you so many points or charge you fewer points
Exactly.
because they know that you're a dependable, reliable individual that they want to do more business with. And you do that by making sure you're set up for the first and the second and the third deal.
Absolutely. Yeah. I mean, that's why, I mean, that's why understanding lending, when you're doing real estate, understanding lending is very powerful because you're going to understand how you can leverage those entities to do your deals and how you can use them to your advantage and your company's advantage to be able to do more, right? So that's why, one of the things that you have to understand is that with private lending, hard money lending, or any other sorts of lending, usually when you're buying investment properties, they don't want any other liens on the property, right? So they don't want any other second loans anymore. Before they used to, they used to allow second loans. Now they don't, right? They don't like it. So that's why term loans work perfectly with this type of financing, and they work perfectly with these type of transactions because they're unsecure. They're not going to put a lien on the property, right? And you're going to stay compliant with the bank, with the lender. It's not a bank. Again, sorry about that. It's not a lender. It's a private lender. Okay. So and you're going to stay compliant with their guidelines, and you're going to be able to do that transaction still. Now the other things that you can use that cash for is also to leverage, uh, to show better liquidity and be able to borrow more, right? Sometimes, when
Right.
these lenders are analyzing your profile. Uh, Again, like the three things that we said that we're looking at is liquidity, experience, and location, right? When they look at the liquidity, the more liquidity you have, the more comfortable they feel to lend to you, and the easier the things are going to be. And like you said, you're going to probably get even better rates because of that. So if you have all three of the things, so yeah, definitely. So we're going back to the business lines. Okay, so going back to the business lines is one of the things that you're going to be looking at when you're buying properties through hard money or through private money. It's some of the costs associated with that type of lending. Okay, so that type of lending is a lot easier to get now, and the great thing about it is completely done under your company. So it's not like a regular conventional loan out there,
Yep.
or FHA loan that you're buying a property and they ask you for all sorts of documentation from your personal side, right? This is completely done under a company, and it's completely asset based, right? So it's completely done based on what the property is worth, what the property needs to be done with, and everything else. So some of the costs associated with those that you're going to see, some lenders have upfront fees, some don't. Okay, and it's okay. I mean, of course, there's a lot of people out there. I've seen a lot of things online that people are afraid of the banks that are charging up front. And, they're right. Of course, there's a lot of people out there scamming people and, asking for money up front and things like that. And we see that all the time. Uh, to get a pre-qualification done, you don't need to pay absolutely anything, right? Even with you don't have to pay absolutely anything until you're actually done with the whole process, right? So, and with these lenders, usually it's the same thing. But when you're buying real estate, there are a couple of things that you have to pay up front,
Right.
right?
And
Like
that,
sometimes you have to pay for. Mhm. like, again, sorry about that. The like application fees, project feasibility fees,
I think we're on a delay
processing
again.
fees, and yeah, sorry about that. And then joint and general contractors review. Okay, so depending on the size of your deal, depending on the size of the transaction that you're making, whether it's a rental that needs a little bit of fixing or it doesn't need anything, or if it is a fix and flip that is a small rehab or a big rehab. So depending on those things, obviously we're going to go through a couple of fees that they require, and obviously if the transaction, if the rehab is a big rehab, they're going to be looking at the contractor. They have to analyze the contractor. They're going to have to do an appraisal on the property. They're going to sometimes they even go and inspect the property before they even give you the loan. And then they also do a feasibility review for the deal, depending how complicated is your deal and things like that. So, and those are some of the things that the banks charge up front. It could be anywhere from $500 to $1,500. Okay, and look, I paid that before, so I know that now in the recent years, a lot of the banks that were not charging those things because they were just trying to, you know, get clients, right? So obviously, they were willing to charge some of those fees at closing, but you got to understand that not all the deals close as well. So a lot of these lenders now they're charging some of these things up front, right? Like some of the inspections, appraisal, and sometimes they can credit those things at closing, but in the beginning, because sometimes they use third party companies for that, they have to pay those in advance sometimes. And those are some of the things that we can cover with business lines, right? I don't know if you can. We have a little delayed, so I'll wait for you.
Hmm. So going back to a point a lot of folks really like about working with processing fees. It's a way to pay us until we're completely majority of the folks will throw it on hey, um, but then letting them know that hey, it's one time fee when the credit limits increase, you other financial products, you don't pay us another fee. Institutions and lending sources out there where you're going to pay every time to, renew a loan or get limited engage the capital you need for your business.
Right. You're cutting off a lot, Justin. So that one came out a little bit. I'm not sure if on Facebook is coming out correctly. So if anybody is able to tell me how it's coming out, I will really appreciate that. So, but yeah, I mean, definitely something that see if in the meantime you can. If your Wi-Fi is probably messing up with you in there a little bit, but the idea is that we with most of the banks we're gonna be looking at different sorts of fees, and obviously those are some of the costs that you're going to be looking at, that you're going to say, well, sometimes a lot of the investors don't count on those things. Okay, so just to kind of give you an example, when you're buying a property, right? So we're looking at application fees, project feasibility, general contractor review, processing fee. That most of the times those they get paid at closing. Appraisal deposit. Some of them they require that. Sometimes the appraisal can go up to like $700 for a single family or 2 to 4 unit, and then for multifamily and to mixed use properties, bigger properties are up to like 2 grand. So and those are requires to be. They usually require a deposit for that and things like that. Now, with different lenders, some of them now they're also allowing to include some of those soft costs in the financing. But because of COVID now, a lot of things are changing all the time. So I mean, I would say don't count on it until you actually get really close to that, and until we get into the deal and we can see whether we can include those things in there or not. Now, one of the things that I wanted to talk about, Justin, also is about the using also the business lines to buy properties, right? And that is something that a lot of people like to know, and a lot of people uh, are looking. Sometimes they don't understand how we do that. And look, one of the things that I wanted to share with you is that there is a couple different ways to do it. We definitely help our clients learn more about the different alternatives to do that. But one of the ways that we use it is using third-party companies, and third-party companies are there that we can use to be able to pay for things with our business lines um, that otherwise we can't, right? So we can show up at the title company and swipe the credit card when to buy a property, right? So we use third-party companies that they allow us to pay for things that otherwise we couldn't do with a credit card, like a mortgage payment or things like that. But in this case, is to buy properties. And we all done it. So the idea is that we want to help you understand that, and we want to help you see how we can how actually you can leverage those business lines to do as much of a real estate as possible, right? So the idea is, I don't know if Justin, if you can hear me with a delay still or not. If you want to touch that a little bit.
Ask me all the time, well, can I buy, can I put the down payment on my property? Back to what we were saying before, where there's a lot of cost throughout during through your business that you could put on credit. Um, so that's when I usually, Christian, how can people take advantage of a line of credit that's right now just a credit card and purchase their house? Because are there ways to liquidate a credit card? Absolutely. We all know that they're very expensive, and it's not necessarily the way that you want to do it. But there are other things that you can probably take advantage of with credit and free up the liquidity, so that way you do have the cash to put down on the house.
Right. Yeah. So there is definitely possible. So we're going to give you definitely some information on how to get in touch with Justin and with me. So we can talk a little bit more about that, because it's more in it's more based,
Yeah.
it's like case by case basis, right? And depending on your situation, is how you can get that done. But it's definitely possible. I've done it, and many real estate investors that I know have done it as well. So definitely have that in mind when you're looking to do that. So Justin, now we're kind of getting into the end of the broadcast for today. So why don't you really quick give them your number and your email address so they can get in touch with you if they're looking to do anything for their business. So that way we can,
Yeah,
see if we
absolutely.
can help
So
them.
you can always reach me. I always give out my cell number just because it's the easiest way to touch base. So area code 262-909-5954. And then you can always email me, Justin at nationalcorporatecredit.com. And if you call me up and you have a real estate question that you need Christian answer, I can literally just reach over the desk and hand my phone over to him.
Absolutely. Yeah, absolutely. So absolutely. So and so we're gonna be. I'm gonna give you my information as well. And again, we work as a team with Justin. So we're gonna be able to get you the all the information that you need and all the funding that you need for those real estate deals. So definitely get in touch with us. Reach out, and we'll we'll see how we can help you best. Right.
Absolutely. Christian, I
All
appreciate you
right.
having me on, my friend.
Thank you very much, Justin, again for joining me today, and I'll see you. I'll see you in the office. All right.
See you, buddy.
All right. Bye. So, all right. So, thank you, everyone, to join us today. If you want to get in touch with me, one of the best ways to get in touch with me will be through social media. The best way for to reach me, it will be through Facebook or LinkedIn, or if you want to give me a call, that's not a problem. My direct line is 847-220-7247, and I'm going to give you my number here. I'm going to show that with you, so that way you can see how we can how we can help you with your real estate needs. Anything that you need to know, even if you just have a question about real estate, about funding, if I can help you, I'll be glad to do so. We're always here to help anybody, even if you don't get the funding with us. I mean, feel free to reach out. I would love to give you some information and help you out. So that's why we have the guys in National Corporate Credit that are the ones that they sponsored our broadcast every week, because that way is the way that we can use it to provide more information, and the way that we can help you get access to more creative ways of financing for your real estate deal. So definitely give me a call if you wanna talk. My number is 847-220-7247, or just go to getunsecuredcredit.com and find out how you can get out to 250 grand in as little as 7 to 14 days for your business, any type of business, even if it is real estate or any other thing, right? Consulting, marketing, any type of business is able to get access to that. But I'd like to help you in your real estate deals as well. All right. Thank you again. Thank you everyone for joining me today. I really appreciate it. So I will love you if you can share some of these with your friends and anybody that you think that might need some funding for their business. All right. That's it for me today. Thank you very much again, and I'll see you next week.